All right. Good afternoon, everyone. Very honored to be back here at TOKEN2049 again, and today being joined by a phenomenal panelist. Really, I think all three of them needs no introduction, but I'll still give the floor to them for a quick self-introduction before we kick off today's panel, which is the path ahead for crypto as an asset class. I can start with you.
Would you like me to begin? All right. Dan Tapiero. Hello, everybody. I'm the founder of 10T and 1RT. We are the, as far as I know, the only growth equity fund out there exclusively focused on businesses in the digital asset ecosystem or blockchain, crypto, Web3. I don't know what we're calling it, but in this world. So that's who I am. Yep.
All right, Jenny Johnson, President and CEO of Franklin Templeton Investments. We are a $1.5 trillion old rails asset management company who's looking and actually have been in the crypto space for a little while and are big believers that it's the future of asset management.
Tom Farley, I'm the CEO of Bullish. We're an institutional digital assets exchange. Right now, we trade spot, and we're doing well. Second in ETH the past week in spot. We're adding perpetual futures in November of this year, touch wood. That's my intro. Awesome.
Well, I want to kick off with Jenny here because Franklin Templeton has been in the news recently about your ETF application, and you guys also put a money market fund on chain, I believe. So I wanted to get your perspective on how you guys are thinking about crypto as an investable asset class and your roadmap.
I mean, so I think the most important way to think about it is this is a technology that enables significantly reduced friction in transactions, right? And so if you think about financial services, there's a bunch of toll takers as a transaction happens. So if you can take those folks out, there's a lot more creative things that you can do. So this is going to enable new types of asset classes to invest in. But I also think, so we did file for a Bitcoin ETF today, but I have to tell you that I always say that Bitcoin is the greatest distraction to what is the greatest disruption in financial services, which is blockchain. That doesn't mean I'm not a fan of Bitcoin. It just means there's so much more there. And I think eventually, why would you have an ETF or a mutual fund? You would just have a tokenized product that because today, if you own an ETF, while it trades all day on the exchange, it actually only prices twice a day. So you're actually buying something without all the information. So imagine a token. One, it could trade 24 hours if you wanted it to. And two, the smart contract can ensure that you know exactly what the pricing is of the underlying assets at the time that you trade. So again, big believers that this opens up new investment opportunities, as well as it'll drive cost out. We have an SEC-approved money market fund. We're the only asset manager that is doing an actually on-chain transaction as the official record. We built a shareholder servicing system, worked with the SEC to get it approved, and that was just what we think is the beginning of the opportunity.
That's great. I mean, I think that's going to bring hopefully a lot more liquidity and volume into crypto market, which we all so desperately need. And a question for you, Dan, here as a long-term macro trader of gold, Bitcoin since the early days, and with your 10T holdings, I think more recently one roundtable. Wanted to also get your take on Bitcoin, its path ahead, and also maybe some other areas that you're looking to invest in.
Yeah, I mean, well, Bitcoin is the core asset of the space, and I think Ethereum's sort of right there with it. And so I think there's a big difference, at least from my perspective, between Bitcoin and ETH, which are established assets. I think ETH has achieved network effect, and you've seen that ecosystem really explode in the last year or so. There's a difference between those two assets, and I think the rest of the space, to me at least, is still venture. I sort of look at those two separately. To me, the bear market is finished. We finished it in Q4. In fact, in London 2049, I was speaking, it was the day after the FTX collapse, and I said, they asked me, so what's the impact of the FTX collapse? And I said, well, it actually is not going to be that great on our portfolio. And someone in the press quoted me and said, left out the our portfolio part, and quoted me as saying, oh, it's not going to be that great. But I think that was the moment of max panic and max negativity. And it was certainly a big shock. And the price of Ethereum at that moment actually couldn't make a new low in price. So as an old trader, it's called a bullish divergence. It's a very sort of well-known sign that when an asset can't make a new low on horrible news, the selling is dried up. And so, in fact, actually within a few weeks of that event, we actually deployed the remaining $120 million in our Fund 3 into the businesses in the space at pretty dramatic discounts. And so right now, certainly the market in the secondary for crypto, Web3, blockchain businesses is virtually empty. I mean, we're very active in the secondary, and we're seeing tremendous discounts, 50 to 80%, on companies that are doing very well still. So I think that's a big opportunity, and also the opportunity to lead rounds in sort of B, C, and later, which is our focus. Some of the private equity players that had come into the space in 21, 22, they've pulled back out, and I think they've been pretty clear about that. I mean, even Temasek here in Singapore has mentioned that they are not looking to invest in the space at the moment, and certainly there are more high-profile private equity guys as well from the traditional world who've pulled back out. So, we're finding that we're some of the really only investors in the entire space in this sector. Companies that are a little more mature would be B and C rounds making $50, $100 million in revenue plus. And so it's never been a better time, at least for us, to invest in the companies that we look at in the space. So
there's a survival bias too, right? Whoever's
there
still
sure
around
is.
making 50 million revenue, it's a tough.
But there are quite a few companies. You'd be surprised. Yeah.
Makes sense. And then also, I guess, speaking of the whole FTX debacle, right? Tom, you're
speaking of it, Tom.
Speaking of debacles.
Yeah.
Speaking of exchanges, right? The counterparty risk is top of mind for all of us now in terms of where, even for Amber, where we choose to trade, where we choose to park our capital, and how it's settled. And with Bullish, it's a slightly different setup. So what is, in your current roadmap, and how are you guys thinking of the exchange setup and the new sort of environment?
I'm hoping that we find something to vigorously debate on for entertainment purposes, but so far I agree with everything that Dan and Jenny have said. I think that, look, things aren't great right now in the digital asset space. I agree, they're not as bad as the day after FTX went down, but let's not kid ourselves. Like, things aren't great. It's difficult to make money. We'd all like to see more innovation, so on and so forth. But I'm a big believer in Bitcoin. I'm a big believer in blockchain, as Jenny said, blockchain technology generally, and a lot of what's going on in the space. However, I feel like granddad here at this conference. Everybody's talking about decentralization, and I see an industry that with every passing day is ever more reliant on the US dollar. Not even other currencies, like the US dollar. And I don't know a lot about a lot, but I'm pretty sure the US dollar, no matter where in the world you're trading this sucker, is centralized. And it comes back to the Fed. The other night at a party, I met this young lady, super sharp, lovely, and she was telling me about a new stablecoin, and she said, oh, well, it's a USD stablecoin, and the good thing is we're totally outside the reach of US regulatory authority. And I'm like, are we going back to an algorithmic stablecoin, or is this one that takes in dollars? Yeah, it takes in dollars. Okay, you are not immune. That is centralized. And so we need to be able to figure out how to get along with the centralized world so that we can get to the dystopian, decentralized vision 5, 10, 50 years from now, whatever it takes. And the exchange industry has not been running in a way to get along with the centralized world, with the regulated world, with federal governments. Like, unfortunately, there needs to be some sort of relationship. And that's what I mean. I sound like granddad or a pariah here, and I know some people are shaking their heads, but I am who I am. And so where we focus on at Bullish is like, just run the business like an adult. Tell your customers how much cash reserves you have. Have an audit. Be transparent about who owns the sucker. Like, where are you regulated? What are your risk management practices? Don't be stupid. Just basic stuff like that is ultimately what you need to set the underpinning, to set the infrastructure. And that is not what has gone on in the digital asset space.
But wait, hold on a second.
Yeah.
I want to have something to debate about. I mean, I think it's so dramatically improved from 5 years ago. So I don't really have that negative view. I think there are a lot of, especially after FTX, there are a lot of serious, sort of buttoned up, grown-up actors. I think people were put on notice. They also, you know, he's going to jail for fraud. He's a bad guy. I think people don't want that. I think, you know, there'll always be a handful of people out there on the edges, but I think generally people are much more careful and acknowledge that they have to work with.
Can I rebut it? I agree in part, but in the spirit of debate. I just came from a lunch where there was discussion about how leading exchanges, I won't say whom, leading exchanges in the world are awash with fake volume to this day. Awash. Massive amounts of fake volume. That doesn't feel right to me. At the same lunch, there was discussion of leaders of those exchanges perhaps getting in big trouble. I don't think.
Yeah, but it's been the same thing. I heard that a year ago. I heard it 2 years ago.
Yeah, because it was true.
I traded in the traditional markets for 30 years. I mean, I got jammed so many times trading gold because there was somebody front running me. You know, J.P. Morgan. I couldn't figure out exactly why. Meaning, I'm just saying that, you know, there's plenty of fake trading in the traditional world. There's spoofing and all that nonsense, and so I don't think this space will ever be devoid of that.
Yeah.
I just, you know, since it's so new, I'm looking for improvement, right? And I do feel like the conversation's changed a little bit. But remember also, this is fully global. So the traditional markets grew up, you know, in certain countries, and you have regulators. It's going to be more difficult. You have to get all the regulators to agree. I think there are pockets in the world. There are places where they have, you know, made some nice advancement. I mean, the UK has come out with a clearer regulatory framework. You've got Dubai and Abu Dhabi, Singapore here, Europe. So did we have any of that 4 or 5 years ago?
Good.
We didn't.
That's all good.
I don't know, maybe I'm the big macro guy looking from 20,000 feet and I'm saying, oh, it's better than it was 5 years ago.
I think that's right.
But it's because it will end up being regulated. Anybody who thinks it's not going to be regulated, it will be regulated, and it takes time for that to, and the U.S. has been slow.
U.S.
But yeah, you can look at the improvement. I think anybody who thinks that's not going to happen is going to just fight swimming upstream.
Actually, speaking of this, right, so from an infrastructure perspective, what do you guys think institutional investors need to see or regulators want to see happen, or the improvements you're talking about? What actually needs to happen before we can really take this asset class to a more legitimate level, right? Is it more risk management? Is it more regulatory oversight? Is it custody solutions? What needs to happen, really?
Jenny?
Well, I think I think it has to be regulated. You know, every time Singapore is a perfect example. They were actually the first to start to create regulation around this, and then they had a scandal, and they backed off from it, and then they're now getting back in. I mean, so anytime the consumers are hurt, especially in places where there's a democracy, there's a lot of voters that are hurt, right, and they blame the regulators, then, you know, the regulation is going to step in. So I think that's one. The second thing is, and I was talking to a governor of a state in the US who was very anti anything to do with digital assets. And in the end, the thing that bothered him the most was he said every time there's crime, cyber crime, they're asking for Bitcoin because you can't track it, right? So that bothers. And the reason I think Bitcoin can be hard to invest in, this I know will become a good point of debate, but hard to invest in is because governments will always control their currency. The pressure in the EU, one of the pressure points in the EU is because they have shared currency and unlimited spending at the various country levels, right? So that puts stress. So if ever Bitcoin threatened currencies, you're going to see regulation in it being banned. But if we had regulation that mandated the wallets have KYC like banking does, know your customer, it would improve some amount, but there will always be this ability, as long as there's value in Bitcoin, for this crime to happen. And I don't know how you stop that, you know, because the actors don't have to be in a regulated environment.
I would also just say that I think that this world has grown so much. There are aspects of it that I don't think will be regulated. You know, there's a difference to me between, you know, Bitcoin and ETH, things being used as value transmission. And then, you know, the last panel with Yat and Animoca and the whole gaming side of things, I think it's hard to, you know, regulate people exchanging, you know, PFPs or, you know, their skins or whatever it is. And I don't really see that it can't seep into every aspect. Look, currency, you know, as collateral, you know, part of the financial system of the world, that's different. I think Bitcoin and ETH just provide an alternative. Like, you get to choose. You own dollars, you own euro, you own yen. You decide where you want to allocate your assets. There's Bitcoin and ETH, I think, are just an alternative. Not, I mean, I don't think it's ever supplanting the dollar. I mean, it could be, I don't know. I don't even think in those terms. You said, oh, the dollar's not going away. I never thought it was. But I do think it's a really attractive alternative. And, you know, as an investment, you know, manager, you have $1 trillion under management, you're all about offering choice. So my guess is that's attractive for you because you have clients who say, this is an attractive alternative for me. And, you know, I have a gold business, a physical gold business that I started years ago. That's an alternative. So it doesn't have to be that we're supplanting the existing system that, you know, is a revolution. I mean, there is a quiet one, doesn't have to be talked about, but there are aspects of this world that I think are not, you know, digital asset as currency.
Yeah.
Right.
And I think your gaming example is a very good one, right? Yeah. I mean, that's almost loyalty points within a game. Yeah. And, you know, to the extent that it starts to be able to be traded for dollars, the second it crosses into that, that's where you're going to have regulation step in.
Well, it could actually maybe just go into Bitcoin.
Right, it is right. It could barter, or you can go into Bitcoin. Right. Now, when people say, well, Bitcoin is going to, you know, be the global currency, that's where you'd have it became certain scale.
Right, but it's such a leap. I mean,
I agree.
From where we are today, I mean, it's not even $1 trillion of value in Bitcoin, and, you know, the currency markets trade, you know, 7-8 trillion per day.
Yep.
So we're just, you know, light years away from that, in my view. I don't.
Just on regulation, to go back to what Dan said, like, if the choices are zero regulation and everything is regulated, then, you know, we could have this intellectual debate. Obviously, I think we would all agree that the former is better. Neither of those is an option. I think we all can agree it is what it is, that where there's actual physical currency being exchanged en masse, it will be regulated. Where there's someone acting as a major exchange across international borders, it will be regulated to some extent. And likely, if you're a large custodian, it will be regulated to some extent. It just is what it is. Like, we can debate the merits of it. Besides that, totally agree with Dan. Let's keep regulation out. Let's let market forces drive what's going on. We're already seeing market forces, like Dan described, like things are better. The market is driving that. We're seeing customers are more discerning about choosing who they interact with. You know, we have a nice balance sheet and lots of cash surplus and good practices, and customers are still putting us through the ringer. That did not happen before FTX. So good things are happening on their own without, you know, the ivory tower telling us how to do it. But there will be regulation, and the best thing that can happen from an infrastructure perspective is we all get real sure about what that's going to look like, because then the market can flourish. Right now, there's just so much darn uncertainty, certainly in my home,
But let me ask you a question,
US.
though. How can, you know, we have all these different jurisdictions, countries. I don't ever see a world where every country agrees with the other one about how it should be
But
regulated.
you don't have that in the financial services world today.
You don't have to have that.
I know.
Yeah, you don't have to have that.
I know.
That's
but-
fine. Each country can decide on
Right.
that. I actually like that better. I don't like when countries collude, because then what you get is a superstructure of regulation. They don't say, let's choose this or this. They say,
add.
let's do both.
But so then what happens is, you know, this business ends up growing up in places where the regulatory framework is reasonable. I don't mean no regulation, I just mean reasonable.
That's right.
And you're seeing it in Dubai, you know, for instance, we had one of our companies, actually Dutch company, has moved their home base there. And it was because they felt comfortable that it was a fair regulatory framework. So it's not necessarily regulation, people telling what to do. It's a framework that makes sense for your business.
But best jurisdiction is often a Venn diagram. It's not just most sensible regulation, maybe Dubai. It's also where are the customers? And that's where you don't have the overlap. So in other words, Dubai needs to have perfect regulation, really, really smart to be able to attract firms to go there, whereas the US just kind of needs to be sort of okay. And we're not even there. We're not even there.
I feel like it's too, the whole space is too small really to matter to the US. I mean, the total value in the space today, all the cryptocurrency and all the equity that we see in the value, total value $1.7 trillion is our internal accounting. And that was, you know, that's not really that big, you know, for the US. You know, for Dubai, it's big, and for Singapore, it's big. And so some of these jurisdictions that say, this is innovation, we'd like to attract it, it could impact our economy in a good way, they're more reasonable. I think for the US, it's just too small, it doesn't matter. Right.
Yeah, but if consumers in the U.S. are investing or, you know, whatever, using that company in Dubai, there's still going to be U.S. regulation that is going to have some overlay. So I don't think it just frees it. I think, to your point, it's regulation and where the customers are.
Well, I know that, I mean, I don't know what the stat is today, and you would know better than me on, because you run this exchange, but I think 80% at least of the total world cryptocurrency trading volume is outside of the US. So it's not a US business.
No, but their customers
no, I
in the
understand
US
that. No,
I heard, I don't know if this is true, but something like 80% of the companies setting up in Singapore were US companies that want the regulation in this space, that want the regulation that you have. So, I mean, they're not setting up in the US.
Right.
After what's happening to Coinbase, I think they probably would run.
But
And also, can I just make one more point, Annabelle? Institutions, there really isn't an institutional market in digital asset space. I'm going to let everyone in on a little secret. It's unfortunate, but the truth of the matter is it is very, very small. The so-called institutions who are involved are really professional trading firms, whereas in the rest of finance, when people talk about institutions, they talk about Franklin and others.
Yeah.
Frankly, she manages $1.5 trillion in her company alone. As Dan just said, that's the size of the entire crypto industry. Jenny, I'm speaking for Jenny, and she'll rebut me, hopefully yell at me for putting words in her mouth. Jenny's not going to do something that might imperil the whole of her business to, you know, say, go get in the face of the SEC and start investing in altcoins and risk picking a fight with Gary Gensler. So yeah, I take your point. It's not a US business, but it could be. If we just had reasonable regulation, there's tons of money in the US who would be interested. And we were close before all the crap that went down last year, all the fraud and shenanigans. We were close. There was a bunch of people on the doorstep, and we took so many steps backwards, unfortunately.
Yeah, I was just going to say that even for us who are based in Asia, right? Yes, Singapore and Hong Kong and Japan and Korea, and even Dubai, speaking of the regions, I think a lot of them largely look to the US regulations as well. So it is still very relevant, and like all of you guys touch upon, right, it's still a very highly dollarized industry. So I think bottom line is whatever the US does is going to set the pace for a lot of what happens. And actually, that's a good segue to maybe throwing the question back to Jenny, who I'm sure you look at the space very extensively and speak to the US-based regulators a lot. What is really going on there? We hear a lot of the headlines, we read about, you know, maybe different political agendas, but what really is in the works, and how are you guys navigating?
No, I mean, the reality, like, so we've been working with the SEC. I think we started the process of our money market fund in like 2017, and we'd work with them, and to be honest, they have a challenge too, right? Like, we'd go in, 40 people would show up, we'd educate them on the digital asset space, we'd come back 4 months later, and unfortunately, 39 of them had left the SEC, right? So you're starting, and you know, they're trying, and there's a lot of people, some commissioners that are really trying in this space. So you're constructive with we have to be constructive with the SEC, and you're exactly right. We're not going to risk the rest of the business by ticking off the most important regulator that we have, because that's where the bulk of our assets. And we also co-head the CFTCs, so this is the Commodities and Futures Trading Exchange on cryptocurrency, because they haven't even agreed who should have jurisdiction on it. I mean, so in the US, there's already competition, but it seems like it's a hot potato. Nobody actually wants it. But little by little, we are improving, right? I mean, you do have to look where you were 5 years ago.
Oh, yeah.
But, you know, if there's a blow-up, FTX was really painful for the regulators. They got blamed for what happened.
Yeah. But, I mean, actually, a little to Annabelle's question, I wonder, so what is the status in terms of, you know, all the different regulatory bodies? You are engaged with them, or you have people who are. Do you have any sense?
I mean, here's how crazy it is right now.
Okay.
So the accounting office within the SEC, which doesn't always talk to the other side, has come out with an accounting rule that if you have a tokenized asset, you have to keep on your balance sheet dollar for dollar. So that means everybody who puts money in our money market fund, we have to keep $1 on our balance sheet. Well, that pretty much will kill anything, right?
Yeah.
Now, the good news is we're in there talking with them saying, hey, by the way, this is, you know, this was unintended consequences of this, and they're really engaged in trying to figure it out. Like, they did it for good reasons, not understanding the bigger. So, you know, they're constructive, they're paying attention, people show up, they've got their own issues with turnover, and to your point, where do you draw that line on regulation, right? You know these things need to be regulated, these things shouldn't, but unfortunately there's a big swath of gray, and that's where they're going to get in trouble.
Yeah.
Yeah, well, I guess we'll have to see what happens next time. Yes, thanks, Jenny. And then I think maybe we'll use the remaining 10 minutes or so and just talk about broader macroeconomic outlook. That's also very relevant to the crypto industry. I think it's more liquidity driven these days. And actually, I was in the US recently, and I felt this sense of false sense of economic recovery, or maybe it's actual resilience. I'm not sure, but people are still spending a lot, even though inflation is high, things are getting expensive. And actually, I think what happens to crypto prices largely dependent on what the Fed does in the next course, right? So yeah, heading the floor to the rest of you guys is to think about what's going to happen in the next year or two.
Don't look at me. Don't look at me.
So I don't think
two brilliant minds. I defer to both of them.
Look,
I'm curious myself. So.
I don't think it's what the Fed does. I think it's a risk-on, risk-off trade. And I always say to people, you'll start to see the maturity in the market when ETH and Bitcoin don't trade together, right? They're actually two completely different business cases. And the fact that they trade right along with each other and the entire crypto ecosystem trades together tells you that it's risk on. When risk is on, crypto goes up. When risk is off, that means people are moving money towards cash and others, then you see crypto go down. And it just happens to be that the risk on, risk off, people are evaluating the Fed's actions as indicative of one way or the other.
There's an inherent cost of capital, right? If I deposit my money with money market funds versus putting on DeFi, the risk return.
Well, we like our yield coin because actually you can put it in that and get yield, so you don't have to. Whereas the stable coins, you don't get any yield.
Yeah. What about you, Dan?
Well, I mean, I think the Fed is over-tightened, and I think they're done, basically. And I mean, I've been fairly closely watching cycles for 30 years in the Fed, and my personal view is this is the worst Fed that I've seen in terms of their ability to make judgments. What can I tell you? You know, they panicked and got very aggressive when the CPI headline hit 8%. And they said, well, we're going to get CPI down to 2 to 3%, then we'll be okay. So CPI then hit 3 last month or whatever it is. I think within the next sort of 3 to 5 months, we'll have a 2 handle on CPI. And I think it's untenable for them to raise rates in front of an election in November when they've hit their stated target. And so I think they over-tightened. And the economy in the US is softening, and there are certain sectors that are completely getting crushed, housing and the lending business. And I just see growth and inflation slowing. And so I think by Q2, honestly, they probably are ending up cutting rates. But again, that's maybe a little bit of an outlier view, I don't know, but all the data and the leading indicator, all the leading data I look at all suggests inflation is going to undershoot. But that'll be very bullish for our space. So I think, I do think the bear market finished on that day, but now we're in this consolidation period. We're not in a bull phase yet, but we're going to be causing a lot of pain as the market goes sideways and people are interested and then they lose interest. And but you know what? To be honest, I say that's been my view, but I come here and I'm getting like steamroll. I'm getting knocked down by how many people are here. It's 10,000 people. This does not feel like a bear market. You know what I'm saying?
Yeah.
It doesn't feel like a consolidation
get
phase
in the door.
Either, right? Like this is like boom time. So I don't know. I think we're going to have a resumption of the bull phase. Certainly by next year this time, everything will be higher, and I think rates will be lower.
Amen.
So,
Love to see that, yes.
Can I just offer one thing, Annabelle? I won't share my macro thoughts, especially after these two. The only thing I could guarantee is I'd end up being wrong. But I think we're all confident that we're not going back to a zero interest rate environment. And so much of the digital asset space is built on top of stablecoins. So one thing for us to just look out for is there's around about 100 billion of money locked in stablecoins that don't pay interest back to the users. And Jenny hit on this. Their money market fund, their tokenized money market fund, is essentially an attempt, these are my words, not Jenny's, but it's an attempt to kind of solve that. So, if you invest in that, then the money goes back to the holders. I don't know if that'll be the right approach or not. I've no idea. But something's got to give, because at 5% yields, 6% yields, 7% yields, $5, $6, $7 billion is a giant sucking sound on.
Yeah, it's going straight to the house.
On this industry, it goes straight to the house. So that's something to look out for. I suspect there will be pretty substantive changes, if I had to guess, in the relatively short term.
But it's interesting, right? The new narrative of real-world assets really is just bringing the more traditional finance yield opportunities back to crypto, and I think actually, for us, right, we have the more Bitcoin, Ethereum, or stablecoin denominated hedge fund products, and we just launched a underlying T-bill underlying fund as well, and the demand there is just that justifies why there's a lack of liquidity and, frankly, a very, very slow and not volatile market in crypto land, because there's really no need to trade too much, right? So in that sense, actually, for you guys, Tom, what are some of the newer products maybe you guys have in mind in this slow grind before hopefully next year, to get Dan's words, we'll have a bull market again?
I'll answer it quickly just because we only have a few minutes left. As I said, tactically we're adding products here and there. We launched Fix yesterday and Margin last month, and we're going to do perpetual futures at the end of this year. The stuff that gets me most excited, going back to Jenny's very first comment, like the blockchain innovations are very exciting. What is exciting about the blockchain? It's secure, it's transparent, it's final. It's basically instant settlement. So when you say, Annabelle, yield opportunities of TradFi are coming to digital assets, amen. Like, I love cartoon animals and frog coins as much as the next person, but I think there's a more compelling use case to just cut out excess and largesse in the financial infrastructure using blockchain technology. So we're spending a lot of time there trying to understand what's the future of stablecoins? Will we have additional currencies? What's the future of remittances? How can we move money from one country to another country? Those sort of areas, those sort of products at Bullish, we're spending a lot of time on.
I think this concept of like cultural assets. So again, anywhere where there is in the traditional space, anywhere where there is a revenue stream, there's an opportunity to essentially fractionalize it because of this technology. So what does blockchain do? It's three things. It's a source of truth. So I know if Dan has that token, I don't have to go to a title company. He has all the rights that that token has. It has the ability to do smart contracts, and it has the ability to pay, right? So you can argue whether it should be Ether or dollar, whatever it has ability to pay. My favorite example is Rihanna's 300 tokenized, she issued 300 tokens, each one worth 0.00033% royalties in one of her songs. So when the streaming service Spotify plays that song, that little fractions of pennies can come back to Dan because the smart contracts execute and you get paid. So you think about how this is going to open up really interesting. Athletes are going to sign big contracts and say, you know what, fans, I'm going to sell you 10% of my future revenue. I have essentially locked in my ability in case something happens to me. And oh, by the way, my fans are going to probably pay a premium because they love me, right? So anywhere where there is a revenue stream, that's where the innovation is going to get really exciting and I think open up.
Yeah, and I agree completely. The next bull phase, I think that's going to be a big component. The tokenization of real-world assets we were talking about before, RWAs, even this year has gone from 100 million to 700 or 800, and it's basically zero. But I mean, I think that's a huge area. Huge area. Yeah, I agree.
Great. I think we only have a minute left, so we touch upon some of the new innovations that you guys are excited about. Maybe let's just close it, with anything you guys want to share with the audience, what you're looking forward to, what you'd like to see being built in the market. Start with you, Dan.
Well, I would just say, be patient, hold tight, and I think that the innovation in this space is the single most important thing, and that's what's driving us forward. And so, yes, regulation will take time, and other problems. We're going to continue, of course, we'll always have problems, but it's just the pace of innovation just continues, regardless.
I think we're at that phase, if you think about the Android phone or the iPhone when it came out, right? I always describe it like the iPhone came out and you had music and you had a camera and you had a flashlight and you had, a telephone and you thought that was really cool. But what Steve Jobs and Apple saw was they were giving a platform for the world's creativity. And this is a platform. It's going to be really exciting to think. And I guarantee you they never imagined the types of things we can now do and the businesses that were created. And that's the same thing that's going to happen here. And we're just really at that stage of that early iPhone.
Great. Let's close with that. And thank you all for your time today. Thank you.